Morning, everybody. The July 28, 2016 Veterans Land Board meeting will now come to order. Before we begin, just wanted to state for the record that item 13 has been pulled from the agenda. We'll take up that item in the interim. First item on the agenda is number 1, which is approval of the minutes from our last meeting on April 28th. After me and my fellow board member have had a chance to review, and assuming no questions, comments, we can entertain a motion to approve said minutes. Motion is made, seconded, and carried unanimously to approve the minutes. Next item on the agenda is number 2, as stated.
Thank you, Mr. Chairman. Members, for the record, Rusty Martin, Chief Investment Officer. We have several items on the agenda today. They are business as usual. The first one is approval of this agenda item would constitute a renewal of the board's annual authorization of the substitution of existing liquidity facilities or the entrance into new liquidity facilities associated with existing or new bond issues in the Veterans Housing Assistance Program and the Veterans Land Program, and the authorization of the amendment of any resolutions associated with such bond issues. In keeping with past practices, the board approved a resolution last year in July that authorized staff to substitute over a one-year period as necessary various liquidity facilities provided by various liquidity providers on existing VLB variable rate bond issues and enter into new liquidity facilities related to any new VLB bond issues during that one-year period, and also to amend or supplement the resolutions associated with any of those bond issues. Since that time, staff pursued additional liquidity commitments from both existing and new high-quality liquidity providers, and we were able to meet all of our programmatic liquidity needs. Although it's still a little difficult to find large creditworthy banks that are interested in providing liquidity at a reasonable price, we fully expect that we will aggregate enough commitments to meet our projected liquidity needs for the next year at reasonable pricing. Therefore, I recommend that you authorize staff to substitute existing liquidity facilities or enter into new liquidity facilities for a one-year period beginning July 30th of 2016 and ending July 29th of 2017, and also to amend or supplement certain existing bond resolutions that are needed to accommodate substitutions as necessary during the period. I'm happy to answer any questions you might have.
Motion is made, seconded, and carried unanimously to approve item number 2. Next item on the agenda is number 3.
Thank you, Mr. Chairman. Members, approval of this item also is another of our annual approval items. It would constitute the annual renewal of your authorization for staff to enter into certain interest rate swap transactions upon notice to the chairman or the chief clerk for a one-year period. Financial markets continue to be volatile, and they're likely to remain so in the future. Those kind of markets often create attractive but very fleeting opportunities for entities that are sophisticated, experienced, and well-positioned to take advantage of those before they're arbitraged away by market participants. However, as you know, our quarterly meeting schedule is not conducive to executing quickly upon transactions like that before they disappear. In recognition of this problem, beginning in January of 2009, the board authorized staff to enter into interest rate swap transactions as opportunities arise upon notice to the chairman or the chief clerk for rolling one-year periods. Over the past year, we didn't utilize the delegation of authority. However, we strongly believe that the annual adoption of this resolution should continue and provides us with the flexibility that such a powerful tool adds to take advantage of short-lived attractive opportunities as they arise. Therefore, I recommend that you authorize staff to enter into interest rate swap transactions upon notice to either the chairman or the chief clerk for a one-year period beginning July 30, 2016 and ending July 29th, 2017, and I'm happy to answer any questions.
No questions at this time. Motion is made, seconded, and carried unanimously to approve item number 3. Next item on the agenda is number 4, as stated.
Thank you, Mr. Chairman. Members, approval of this agenda item would constitute board approval of the issuance and sale in one or more series or installments of up to $250 million in tax-exempt new money general obligation bonds in the Veterans Housing Assistance Program in 2017. In 2015, you approved a one-year resolution authorizing the issuance of up to $250 million in tax-exempt new money general obligation bonds in the VHAP during the 2016 calendar year. Subsequently, We closed on the $250 million State of Texas Veterans Bond Series 2016 in January of 2016. As you know, the program is limited by federal tax law to no more than $250 million in new issuance per year, and demand is such that staff continues to expect that we will issue $250 per year for the foreseeable future. Therefore, it's time again for the board to approve a resolution authorizing the issuance of up to $250 million in tax-exempt new money general obligation bonds in the BHAP during calendar year 2017. These issues are typically structured as synthetic fixed-rate term bonds, which we create by issuing variable rate bonds that are effectively converted to fixed-rate bonds through the use of floating to fixed amortizing interest rate swaps. With the exception of 2009 and 2010, we've used this structure in virtually all of our new money transactions over the past 14 years, and has consistently allowed us to achieve a true interest cost that's about 130 basis points below the true interest cost that would have been associated if we had instead issued traditional tax-exempt housing bonds with a typical housing rate structure that includes serial term and planned amortization class bonds. Recent conversations with our financial advisor indicate that we should be able to continue to use the same structure with similar results. Therefore, I'm recommending that you authorize the issuance of up to $250 million in tax-exempt new money general obligation bonds in the Veterans Housing Assistance Program between July 30th, 2016 and July 29th, 2017. In addition, I recommend that the bond's final maturities not exceed December 1, 2048, and the TIC on the bonds not exceed 5%. I fully expect that we will once again issue the full $250 million in January of this year, just as we did last year. I'm happy to answer any questions.
Where do we have that kind of demand?
It's a very strong demand.
Motion is made, seconded, and carried unanimously to approve that item. Next item on the agenda is number 5.
Thank you, Mr. Chairman. Members, approval of this resolution would constitute your approval of the sale of up to $1 billion of loans in either the Veterans Land Program or the Veterans Housing Assistance Program in one or more sales. Just as a little background, in June 2002, the board implemented a funding mechanism that pools loans originated to unrestricted veterans in the Veterans Housing Assistance Program into Ginnie Mae pass-through certificates, and then we subsequently sell them in the secondary markets. The proceeds from those sales are then used to originate new loans to unrestricted veterans, and the process is repeated, so it's created a recycling program for us. Since the inception of this funding mechanism through March of 2016, we've had 76 loan sales and a par amount of just a little bit over $3 billion. The weighted average price on those sales has been 98.35%, which I think is pretty remarkable given that we basically have loan rates that are well below market, typically in the 50 basis point range, and that means that we really only subsidized those loans to the tune of 27 basis points. So it's been a remarkably successful program. Since November of 2003, the board has delegated to staff the authority to sell up to $3 billion of home loans in one or more sales. We're now approximately $252 million away from that $3 billion mark. Therefore, we're seeking authority from the board to sell to up to an additional $1 billion in loans in one or more sales. But this time, instead of just in the housing program, this would be in the housing or the land program. The reason for that is that we started making land mortgage loans in 2007 and have now built up enough critical mass in that program to actually be able to sell some loans in there, and we are working on a land sale at this time. With regard to the housing loans, we expect we'll probably sell about $700 million of loans over the next 3 years. City Mortgage will continue to convert existing loans into Ginnie Mae certificates, and they'll also continue to act as our bidding agent for the sale of the Ginnie Mae's at no charge. They offer those certificates to a group of investors that are active participants in the Ginnie Mae secondary market, so the pricing that we get is very attractive. If there are loans that do not qualify for the Ginnie Mae pooling, we may sell those in various whole loan sales. With regard to the land loans, as I said, we're currently working on a sale there. We're working with our financial advisor, this George K. Baum, and there is no really market for land mortgage loans. We're about the only game in town, so in addition to putting a sale together, we actually are developing an investor market for this type of product. We expect that we'll sell approximately $300 million of land loans over the next 3 years. So shortly before that $4 billion mark is reached, we'll once again seek similar authority from you. Therefore, I'm recommending that you grant approval for the sale of up to $1 billion of loans in the Veterans Land Program or the Veterans Housing Assistance Program in one or more sales. I further recommend you set a minimum overall weighted average price for each sale at 90% of par. I'm happy to answer any questions.
Help me remember, unrestricted veterans loans?
Those are the ones that don't qualify for the tax-exempt financing, so they enter the service greater than 25 years after they apply for a loan more than 25 years after they're discharged from service. It's running about 20 to 25% of total demand now.
Okay, I have no other questions.
As far as the anticipated land loan market, will it be exclusively institutional in terms of the investor profile?
Oh,
for those
yes.
loans?
Yeah. There will be qualified institutional investors. You know, we've been working for several months on this with our financial advisor, and we just had a recent call last week to discuss. We did a final scrub on the portfolio, and they've been talking to their trading desk about it, and the trading desk is very excited about the product. Our timing is good. There's a lot of money looking for yield in the market right now, and there's several investors that have the capacity to take the whole. There's about $240 million available in the program right now. They have 3 investors that they think could take the whole piece if they pass all their filters. So I'm pretty excited about it. You know, it's always good to be lucky. Some timing is everything, and I think we're bringing this to a market where it looks like we may be lucky and find some people that are willing to pay up for this product. And it's an attractive product. I mean, it's high quality stuff. The forfeiture rate, delinquency rates are very low on these things, and prepayment speeds are high enough that the average life on the transactions is really in the 8-year range. So given how high the coupon is, because the coupon average is about 6.9%, it's really like buying a pretty high-quality medium-term bond. So there are a lot of investors that otherwise might be turned off because it is a raw land mortgage that's securing the transaction. The features that I've talked about mitigate that, particularly for investors like big insurance companies that are very yield-oriented, but would not necessarily want to take any kind of concentrated extension risk. This is something to be very attractive to them. So fingers crossed, we'll know pretty soon.
So if you interpolate there, you've got this kind of demand for these mortgages, which are not particularly high coupon rates.
Well, those are high coupon.
They are.
Yeah, the average is 6.9%.
How much?
6.9%.
Oh, okay. I'm thinking lower than that. Let's say that anticipates.
I'm talking about the land loans. Are you talking about the land loans or the housing loans?
The land loans.
Okay.
Yeah. Okay. Good. I have no other questions. Mark, move approval.
Other questions? That being said, motion is made, seconded, and carried unanimously to approve item number 5. Next item on the agenda is number 6.
Thank you, Mr. Chairman. Members, this agenda item is on here at each meeting so we can talk about loan demand. I'm not asking for any action at this time, so it'll be a non-action item. Briefly, in a normal period, our rate locks average about $50 to $60 million per month, and that typically translates into loan demand of $500 to $600 million for the year. However, we were running about $88 million a month through December, and then in January you authorized me to expand the range of the rate setting spread below our constructed benchmark from 50 to 65 basis points below the benchmark to 25 to 65 basis points below. And since then, I've been able to slowly dial down the spread and have been successful in slowing the pace of the rate lock issuance since then from 88 million a month to about $53 million a month, which is in line with the historical average. Therefore, I'm not requesting any changes at this time. We'll continue to monitor the program demand and report back to you periodically with further recommendations. For the record, we have, through 10 months of the fiscal year, we've originated around $700 million in loans in the housing program. Happy to answer any questions. Non-action item.
No question.
This being a non-action item, we can move to item number 7, the next item on the agenda.
Thank you, Mr. Chairman, members. Also, this is a non-action item for informational purposes. This is the quarterly investment report for the period ended March 31st, 2016. Briefly, the first quarter U.S. GDP for 2016 increased an annual rate of 1.1% after increasing 1.4% in the fourth quarter of 2015. Current consensus indicates an expected average annual GDP growth of 2% for all of 2016, which is on the low range, but we still seem to be muddling through in that 2 to 2.5% range. Also, during the period, the unemployment rate remained unchanged from the fourth quarter at 5% even. Fed policy was unchanged during the quarter. They left the rate at 0.25 to 0.50%. As you recall, they increased that Fed funds rate in December for the first time in many, many years. They're also continuing to maintain their current policy of reinvesting principal payments from their holdings in agency-backed mortgage securities and rolling over any maturing Treasury securities at auction. I expect that they will watch economic conditions as they have, and they will be very cautious about moving forward with another rate hike. Since December, they have not raised rates. They met yesterday and did not raise rates again. So the market's looking at September as a possibility now. Given what's going on in the world, I think that's highly unlikely that they would move in September and maybe not even before the end of the year. As far as our portfolio is concerned, we focus primarily on providing the liquidity and cash flow that's necessary to meet loan purchase demand and debt service requirements. And the portfolio is comprised primarily of high-quality commercial paper, short to medium-term Treasury agency, and taxable municipal bonds. Average duration for the period is about 5.26 years. The performance, if you'll turn to the third page of the report and focus on Table 2, where we compare the portfolio with a benchmark, you'll see that for the quarter, the portfolio returned 2.19% versus 0.65% for the benchmark. And the one-year total return for the portfolio is 2.31% versus 0.69% for the benchmark. And the yield on the portfolio is 1.72 versus 0.62 for the benchmark. So interest rates are low. The portfolio is performing very well, substantially above the benchmark at this time. That's my presentation. I'm happy to answer any questions. This is an informational item only.
I have no questions.
I have no questions either. Thank you, Rusty.
Thank you, Mr. Chairman.
That being a non-action item, we can move to the next item on the agenda, number 8 as stated.
Good morning, Mr. Chairman, members of the board. For the record, my name is Charlotte Mumford. There are no appeals to the board today.
There being no appeals, it will not require action from the board, so we can move to the next item on the agenda, number 9 as stated.
There were 14 tracts offered during the forfeited land sale online bidding period of June 6, 2016 through July 26, 2016. We received a total of 304 bids, resulting in 13 high bids. Staff is requesting the board award all high bids that meet qualifications for the land program. I will be happy to answer any questions you may have.
Looks good to me. I approve.
No questions at this time. A motion is made, seconded, and carried unanimously to approve item number 9. Next item on the agenda is number 10.
Staff is requesting that the board take forfeiture action on the resolution before you, except accounts where sufficient funds are received to avoid that action. 14 accounts are being presented for forfeiture action today. I will be happy to answer any questions you may have.
I see one or two of those that are low balance items. We're going to try to work with them.
We'll continue working with those.
And are they working with us?
I'm sorry?
Are they working with us?
Well, some of them, I believe, the lowest one is an estate, and so we're working with family members to see what we can do for those.
Good. Move approval.
Motion is made, seconded, and carried unanimously to approve item number 10. Next item on the agenda is number 11.
Staff is requesting the board take action on the resolution before you. The resolution lists accounts to be ordered for sale, auction today. These 5 accounts will become the tracks for the next forfeited land sale. We're requesting board's authority to pull any account that fully reinstates or into a satisfactory repayment agreement prior to the sale date. I would be happy to answer any questions you may have.
The number keeps getting smaller. I move approval.
Motion is made, seconded, and carried unanimously to approve item number 11. Next item on the agenda is number 12, as stated.
Staff is requesting that the quarterly land sale period be set for the next quarter. Bidding period to begin September the 6th, 2016, with a bidding deadline of October 25th, 2016 at 5 p.m.
Move approval.
No objections at this time. Motion is made, seconded, and carried unanimously to approve item number 12. Item number 13 has been pulled from the agenda, so we can jump to number 14.
For the record, I'm Bill McLemore, the Assistant Executive Secretary. The third quarter, this is a non-action item. The third quarter production report shows that we remain on track to meet or exceed our overall FY16 production goals. It does indicate that due to staff losses at the mid-year point, we did get behind in maintaining our goal of a 30-day average processing time from contract to closure. We're making progress to close that gap, and we expect to close that gap before the end of the fiscal year. As of today, some good news. This year, we've made 4/5 $1 billion in overall loans. We haven't done that in the past decade. I think the Patterson administration did it one time, and the Dewhurst administration did it one time. But with Rusty's help, particularly in the housing market, as you've heard, he is trying to move some of these bond issues around so that we can continue the growth of our enterprise. Any questions? Good. Thank you very much.
Congratulations.
Thank you, sir.
We get to take the credit for it.
Yes, sir.
Make our job look easy. That being a non-action item and assuming no other business before the board, this meeting is hereby adjourned. Thank you all very much.
That's about